Hey everybody, hey, today I want to show you and walk through my cover call checklist here using the real stock example. I just came across this. It's Chewy. Those of you have the loving pets or any of the critters, you know what I mean, that Chewy's a great company, and they're pretty efficient too. Actually, one of the warehouses is right here in my hometown, so they're quick, right? Things get to your door quickly. So I'm looking at this Chewy example, something that immediately catches my eye. It's not an automatic buy, but let's go over my checklist. So remember, everybody, this is free. The link's in the description right here. You just click that link and I'll send this out to you here. But these are the things that I do that's been working for me. First of all, okay, 52-week range. Go down here, review the stock, see if it's at the 52-week high or low. Calculate the midpoint, because I want to see where we're trading at right now in the overall stock. Okay, is it trading below or near midpoint? If the stock's trading near its 52-week high, let's not mess with it right now. Unless the forward PE ratio is a good value, which it's never going to be if it's at the 52-week high. It's just not. Am I comfortable owning the stock if the trade moves against me? I love Chewy. We actually use the company all the time, so I'm okay with it. I'll just buy some more dog food and whatever else we need if the earnings are low. That's a joke, by the way. One retail investor can't move the price point of a stock. Okay, is the company financially healthy in the business I would be comfortable owning long term? So that's where you get into looking at the fundamentals and the statistics on the chart. Okay, now the RSI strength is the next thing. Let's look at the chart. Okay, I got it right here. The reason why I brought this example up, because the criteria of that first section, the step 1, everything meets our criteria. This orange line right here is the 52-week low. So what I did, I went back here and I'm looking for this pink line is a support level that I went back to, and I'm pretty comfortable with this low pivot, broke through. We're testing it. This seems to be a good support level before it broke through right here. So if my price gets back down to, it's a little bit below $17, but I put my mark at 17, that should be a good foundation. And what we'll do is we'll watch it to see if it bounces off that level or if it dips below it. Then we make our decision from there. Okay. RSI. So I come down here. Right now, I wouldn't buy it today because on our RSI index, number one, we're below 50. It's trading at about 36 right now. And I don't know if you can see, but this little line right here, it's got a kink down. So I would not purchase that stock today when this RSI is kinking downward. If this does dip up and starts moving up towards that 50 after we bounce off the support, I could potentially get into this. I should say if the premiums for the options are attractive. I like 50 cents to $1 on the options 30 days out. I usually work with 30 days out. Okay, back over the checklist. Next thing. I like this one here. Avoid buying solely because the stock appears cheap. Okay, that's not a reason to fully jump in. We just identified that support level, and we do know where our resistance is up at the top. Now, the setup. Only buy the stock if the setup remains favorable, okay? Meaning we got a decent premium is high enough for our risk appetite. Like I said, it has to be 50 cents to $1, somewhere in that range. Because what that'll do is that'll give you a percentage that's higher than a 4% for 30 days. If I can make 4% of my money in 30 days, I'm on it. So we like to, once we make a decision, we find that support and we purchase the stock. The best case scenario is we like to see a little bounce off of that support line. That's what this check box is here. Look to sell the call into strength after purchasing stock. We like a little, you can sell it at the same time. I've done that before, but it's a difference between 3.5% or 4.5% on your money. If you let it run a little more, it could be getting closer to a 10% in 30 days. It just depends. It's a personal thing whenever you click that button to sell. Remember, it's much better to sell things than it is to buy, right? Premium. Okay, we just talked about the annualized return. So you take that 4% a month times 12, 48% over the year if you keep doing this play. And I have a dialed in spreadsheet that lets you input these numbers and it calculates everything for it. It's beautiful. I didn't upload it yet because I want to create a tab with all my checklist rules, and then it's going to be ready to go. So that's going to happen in days, probably 2 days. Okay, confirm assignment risk is acceptable, meaning the strike price go together. Be comfortable selling shares at the strike price. If I buy it at $20, let me see what that would be. Let's say, I'll use 20 just to keep it round. If I buy it at $20, would I be okay selling it at $22? Of course. I'll make a $2 gain on my shares. Remember, it's 100 shares per contract. So if I'm able to pick up, I like to go 300 shares, 300 to 500, if it makes sense. And if I have that dry powder available, that's what I like to do. And then lastly, record the trade in the tracker. The tracker isn't up right here, but once I'll let you guys know as soon as I get this thing up, you're going to love it. So again, I use TradingView. Here's my, it's powered by TradingView. That's the chart service that we're looking at right here on this. So that's the next setup that I'm looking at. I would encourage you, hey, follow it with me. This is not financial advice, but this is the next cover call that I am trying to make decisions if I want to jump in or not. Okay, that's just me personally. All right, peeps. Hey, again, if you want this checklist, it's free. Just click that link below and I'll send it out to you. Put your email in there so I know where to send it. And then, like I said, you guys are gonna love this tracker. You go in there, it's got tons of columns. I mean, and they're all. It took me hours and hours to create this thing, days on end. Like I said, I do this stuff for myself. These are the tools that I'm using, and it's working. Okay, so I just want to share it. It feels good to be successful and win trades, and watch that portfolio grow slowly, little by little, and then boom, then there'll be the bigger ones. Sometimes, you just never know when we get into some other plays. But like I said, cover calls is the safest investment strategies I have seen to slowly increase your portfolio value and create a revenue generating machine. Thanks for checking in, everybody. Hit that like and subscribe, and hit the notification bell if you want these videos to pop up right when they come out. You're going to want that tracker. I'm telling you. I'll let you guys know when it's up and running, and then we'll go from there. All right, enjoy the rest of your day, everybody. Peace out.